We've been talking all day about the economy in Europe and the economy in the United States and how everybody's trying to bring down inflation, but the economic situation is a little different in both places. How would you describe the European economy now and Croatia's place in it?
Well, the European economy at the moment, obviously, as we see in the latest data prints, is slowing down, which is something that you could have expected. One thing to look at is how much the services sector will slow down, which was quite resilient. Labor market, though, still remains also quite resilient. We've seen that it didn't feel the consequences of a real sector slowdown so far. So I would say that we are in a position in Europe now where the Eurozone economy is basically stagnating. While Croatia is doing a little bit better, we expect the growth of 3% this year, which is significantly above, I would say, the average. But this is also something that you would expect from the economy that just joined the Eurozone this year and the Schengen, and feels the benefits of that.
Yeah. Inflation, it's come down.
Yeah.
Some ECB staff think that basically core inflation has peaked. What do you think?
Well, I think that it has most likely peaked as well, and it is coming down, but it's coming down very slowly. So what we're seeing at the moment is that we see more signs of slowdown in the economic activity than the inflation itself, which might have to do also with the resilient labor markets and still, I would say, healthy wage growth that we see, part of it being still a catch-up. And part of it probably being also some kind of inflation expectations induced. So the important thing is to look in the next prints of the data whether we will really see a softening of the core inflation and inflation moving towards our target.
Well, it raises the question, the obvious question, do you think policy is tight enough now?
Well, we are now certainly in the restrictive territory. And we got into the restrictive territory by rapidly hiking the rates so far. Whether we are in a restrictive enough territory remains to be seen. And this is something that we will only see from the inflation data that will come in the next sprints.
Do you worry about stagflation?
Well, this is where we might get, and this is, I think, the main risk, as you rightly point. We are in a situation where we see from the PMIs, recent PMIs, indications in the soft data that the economy will slow down, while we don't see that much of it in the inflation prints. However, we have been now through the summer season in Europe, where we did expect that the particularly services inflation will be still high. And it remains to be seen now as we move towards the autumn whether there will be slowing down in the services, whether we will feel the consequences of the slowdown in the labor market, which will be reflected also in the inflation data.
Well, do you think a slowdown is the worst case scenario, or do you risk recession?
I think where we are now is basically something like a stagnation picture. I don't see a recession at the moment. I mean, when I say that, I think about the real recession, not the technical two-quarter data of a very mild decline in the economic activity. So I still think that the soft landing scenario is achievable.
Now, if you pause or if you raise rates, you're pretty close to the end, I would imagine, either way. So then how long do you think you have to leave high rates in place?
That is, of course, the main question, how long they will have to remain where in the restrictive territory, which is restrictive enough to bring the inflation towards our medium-term target. And there is probably some kind of a trade-off in terms of how high we go in a relationship, how long we have to stay there. I would say that sooner we bring the inflation down, the better. And sooner we bring it down, we will be able to cut sooner. And this is the way how I think about where we have to go.
Do you think you get to 2% in the next year or so?
Well, the 2% is something that we, at the moment, expect to achieve in 2025. But I'm pretty sure that by spring, let's say next year, we will have a clearer picture of whether we are firmly on the path towards achieving that or we will have to do more.
Last question. You mentioned Croatia doing better economically. Growth of 3% is pretty good. You got a country like Germany where they've had a stagnant quarter and a contraction quarter. Does it make it more difficult for the governing council to set policy when you've got such divergent economies?
Well, what we are supposed to do is to look at the Eurozone aggregate rather than to our national economies, and this is what I always do. I look at the Eurozone picture and Eurozone macroeconomic data before making up my mind on what to do next in terms of monetary policy moves, and we should all do that.